I'm here to talk about something that is otherwise technically boring, but very interesting for us, and that is crowdfunding under Title III, and this is called equity crowdfunding. And what I'm going to do is walk us through generally what we understand as crowdfunding, because it's one of those words that means many things to many people, to different companies. And then we're going to talk a little bit about this new opportunity around equity crowdfunding, particularly important today because a lot of people in this room who are entrepreneurs are worried about how to get that initial capital to fund their companies. And those of us that have been in it for a while are bitching about how we don't get any capital into our companies. So what we're trying to do is sort of figure out what are the solutions to that. So let me get started. So the project and initiative that we're working on is called Project Equity Impact. It's Title III of the Jobs Act under Reg CF for crowdfunding. So this is what we need, right? We need capital into our companies. You need either early stage capital, a seed capital, or sweat equity, right? So when we start with an idea, we go out, we try to sort of work on that idea, bootstrapping, which basically just means it's your own sweat equity, you have your own money, or you're able to launch your company or to work on your company without any initial investment. And so that's where a lot of folks start. I started that way. I was working as a securities litigator when I started my company and was able to sort of work on it at night for about a year until I was able to raise some capital. So this is really important for a lot of folks of color in the room and for women entrepreneurs and diverse entrepreneurs because we don't often have access to a lot of money to start our companies. So just a little bit of stats. I don't want to get too deep into the problem because we generally know the problem, but very little venture capital, and that's sort of Silicon Valley capital that goes into companies for equity. And when Silicon Valley entrepreneurs or VCs are investing, they're looking for companies that can scale quickly, grow, and then sell, right? So that's called the exit. So very few of those types of dollars go into companies founded with founders that are people of color or women. And so this is a problem that we've all been trying to address in Silicon Valley, and it's part of what Tech Inclusion is trying to address. Part of the problem is that there's just not that many women or diverse funders in Silicon Valley or that are VCs. So the numbers are really clear that we're not getting this kind of capital. And so what are some of the solutions? Just so we understand, I always want to make sure that people are on the same page because we've got lots of different sort of stages of companies here today or entrepreneurs or students, just so that we're all on the same page around sort of what we call funding rounds. This is how you get money into your companies, right? So that first bubble is sort of the family and friends and then bootstrapping. I talked a little bit about bootstrapping. Family and friends round, which is a very interesting round. I was sort of amazed at this word when I came into this the tech scene. That is basically when you're going to your family and your friends and you're saying, hey, I have this great idea, write me a check. Well, for most folks of color, especially given the racial wealth gap, we don't have a lot of people to turn to say, hey, can you write me a $25,000 check? And I can't guarantee that you'll ever get it back. That's a lot of money. I mean, and that's just at the low level, right? So family and friends rounds, traditionally, from tech companies, they're raising upwards of $100,000 to $250,000 just in a family and friends round. And so this is one of the things that concerns me is that if we can't get this capital, how do we grow our companies? How do we make sure that we're getting user acquisition and to be able to go to some of the traditional VCs and get equity into our companies? So angels, some of the panels that we heard today, accelerators, those are the folks and institutions that are giving the seed capital, and that's sort of usually at the $100,000 range. Angels are wealthy individuals that are quote-unquote accredited investors, and we're going to go over that in a minute. They're generally people, advisors, or people that you end up meeting in this ecosystem that believe in you, believe in your company, and again, will write you a check. Again, it's an equity position, so you don't have to usually pay them back. They're giving you that money because they believe in your company, and they think that one day they'll get that money back. Accelerators, Techstar is one of the sponsors. They're an accelerator. Basically, you apply to get into a program. They give you some initial capital. They take some equity, and then they give you some resources. So that accelerator program may last anywhere from 6 months to a year. And there's some really great accelerators, but they're also very hard to get into. And we need to have more representation in some of the top accelerators as well. Sandhill Road Venture Capital is sort of when you actually start to get traditional VC capital, lots of equity funding at that point, usually above $1 million. So those are just sort of the funding rounds that are traditional in tech companies. Crowdfunding sort of fits in between the friends and family bootstrapping and the angels accelerator. So crowdfunding, everybody has heard about it, and everybody thinks different things. A lot of times people will think about Kickstarter. So Kickstarter, what is it, right? It's a rewards-based program. It works really well if you're selling a product, right? I'm making a new shoe. I have a new machine. I have this new gadget. Because what you do through crowdfunding on Kickstarter is that you'll be able to buy that product early on, usually before it's made, and then that company is allowed to get, raise their money, go make the product, and then you get it at a discounted rate, right? So that's such a traditional Kickstarter. Lots of great companies on Kickstarter, but primarily used for a product-based company. It's very hard if you're a technology software type company to go onto Kickstarter, although it is there and it's doing really well. Donation-based, GoFundMe. I always say that people of color have been funding our sort of tragedies or weddings and funerals through GoFundMe. So we've been using this model. So this is basically, we're going to give you money because you need it, and we're all going to crowdsource this, right? And so that's sort of what GoFundMe acts like these days too. It's a donation. You're just giving money for a cause. Equity-based crowdfunding is sort of the boom. Equity-based crowdfunding is where you can invest in a company for equity. You're owning a piece of that company, much like sort of what happens in the stock market. So not like Kickstarter. Kickstarter, you just get the product. Equity-based crowdfunding, you actually own a piece of the company. So what happened under Title III of the Jobs Act, and I don't know if you guys remember, that was one of the initial pieces of legislation that Obama was working on in 2012. Part of what happened with that is that the government was saying, we need to get more capital into companies to jumpstart businesses. And one of the ways that they did this was that they allowed certain types of investors called accredited investors who are pretty much very wealthy. They have enough money to lose in the market. And they said, we're going to allow accredited investors to do what they usually do in the private on a public platform. And that platform is things like Funders Club, Angels List. So a company goes, they put their company on this platform, and then accredited investors are given opportunities to invest. It's a great model. The problem is that it's only for accredited investors, right? And so what we've seen is that now we have this new opportunity called Title III, which is allowing non-accredited investors to use a similar type platform. And that's what I'm going to be really diving into right now. This is just a little bit about the opportunity. We know that crowdfunding will eventually be a major force in how we end up getting capital into our companies. We've already seen a lot of growth in the equity crowdfunding platforms for accredited investors. And I think that this opportunity is going to be huge for unaccredited investors as well. So, not to go too deep into the details of what an accredited investor is. Like I said, it's really for the wealthy. Income is above $200,000. Not including your home and having a net worth of $1 million or more. So for the most part, it's the 3 to 7% of the U.S. are accredited investors. So Title III, like I said, the opportunity here is that now every one of us, non-accredited investors, at least right now I'm not an accredited investor yet, can go and onto a portal like a Kickstarter portal and invest into a private company. It doesn't have to be a tech company. It can be a brick and mortar company as well. Let's say you have a cafe, a restaurant. in a local community. You need to raise some funding because your restaurant or your cafe is so successful that you want to expand. You can't get a loan from a traditional bank. This is an opportunity to possibly use equity crowdfunding through Title III and crowdfunding. So this is going to allow us to go to our user base and to go to individuals to invest in our companies. We've heard a lot about people saying we don't have access to money, we don't have access to early capital for our companies. How is it that we can, but we have a lot of people that love our companies. We know that our users are around, we have communities. This is an opportunity for us to sort of put our money where our mouth is and for us to invest in our own communities. We have huge numbers and growing numbers of young people who are willing to take risks. What this allows us to do now legally under the SEC rules is say, I'm interested in investing in your company. I have $2,000, I'm going to invest. And it does protect investors. It basically says that you can only invest up to about $2,000 for the average person. That gives you some sort of safety around how much risk you're willing to take and how much you possibly could lose. So investment is always a risk. But given the fact that there's a low threshold in terms of how much you're able to invest, there's a possibility, though, is that I can still raise enough money to get off the ground. So what are some of the figures here? A company like mine or yours can go to a portal and we'll tell you a little bit about some of the portals. You can register for that portal and then open up to raise up to $1 million. Up to $1 million every year through crowdfunding. And like I said, you will have individual investors up to the $2,000 mark investing in your company up to $1 million. There are some rules. We're not going to go too much in the rules, but the rules are some of the red flags and things that you'll need to know is that you will have to get some auditing, right? So you have to have disclosures. What are you doing with your business? What have you been spending money on with your business? So you will have to have some auditing procedures. You will also have to file with the SEC. And that is a little scary for most people, I agree. And you need to be very careful if you're going to use this route. But what we're doing right now is really getting people educated about what are the requirements. And so I'm going to have up here my email, and we're going to have some questions afterwards. We're going to be doing some seminars with entrepreneurs that are interested in using this model to really walk you through the paperwork and understanding the rules. But really, it's about the opportunity. So just so everyone understands this, the qualified portal is like a Kickstarter. So there are already a number of portals that are operating. There's about 9 that are already registered, so you can go and find them online. One of them is Republic, that was started by Angel Co. And so I know that they're a reputable online platform that's already taking in interest. So if you're a company that's looking to raise under $1 million and you want to find out more about how to do that, you can not only talk to the Latino Startup Alliance, but you can also look up the rules under the Republic or other qualified portals. One of the things that you'll hear as a red flag often is that when you have investors, there's a thing called a cap table. These are every one of you that's an investor goes on a cap table. So if I have 10 investors, I'll have 10 people on my cap table. A lot of people that are going to be in tech are going to say, I don't want all those people. If I have thousands of people on my cap table, it might hurt me later on. And this is the conversation in the tech community, that I don't want to have a lot of people on my cap table. And so one of the things that Republic is doing that I think is actually a very good workaround is they're allowing a number of people to use this thing called a crowd-safe document, so you'll only have one investor and everybody invests through this actual sort of investment vehicle. I'm getting the 1 minute, so I just want to go quickly. The challenges and opportunities. One of the things that we've been hearing a lot about is that the sort of myth of the selection bias, which is only the people that can't raise traditional venture capital will use Reg CF. And so I think it's really important for us not to get discouraged by that information, because this is an opportunity. I think it's not a perfect opportunity, but over the next couple of years, we're going to see changes in the law. I think there's going to be perfections, and there's things that are going to be changed that are going to allow us to make it easier to access this capital. And there really is an opportunity to engage your users. If you are a company that has a really committed and loyal user base, this is the perfect opportunity to get them to become investors in your company. So it's not just about sort of all of the challenges, but it's really about the opportunities. It's also going to be available for, like I said, for not just for tech companies, for brick and mortar companies. And that's something that we don't often talk about in terms of platforms online, but this is a really great way for a small business to grow and scale. Again, around the opportunity in terms of how many people we can now go after in terms of raising capital. Roughly 230 million Americans will become eligible to invest, and that's really the 99%. So there's my information, and I'm going to be around. I know we have questions. And you can find more information at the Latino Startup Alliance, but also you can email me directly. Thanks so much.